Welcome to Dukascopy TV. I'm Elaine Stenson. Frankfurt has pipped London to become Europe's first payments hub for the Renminbi, following the signing of an agreement by the People's Bank of China and its German counterpart, the Bundesbank, just days ahead of a similar deal with the Bank of England. There is currently no clearing service for Renminbi trading outside Asia. Sebastien Galy from Societe Generale in New York joins me on the line now. Last week we heard that London was due to be the first destination outside Asia for Renminbi payment transactions. What has changed and why Frankfurt?
Well, you can presume that the Germans were better negotiators than the English were on that one. I think that's probably the primary reason. Number two, it might be the case that China wants to basically split its business between Frankfurt and London. And number three, there might be some geostrategic considerations there, where Germany and China are trying to do a rapprochement, and such a clearing facility would be a signal of that.
What impact will this have on the Renminbi?
Well, it means for the Renminbi in practice that it's easier to settle. So if you think about the Renminbi, it's a product which is difficult to settle. It has to be settled basically through official channels, and it's generally accessed by larger companies more easily. And as you allow a payment and settlement facility outside of Asia, in this case in Germany, it probably makes it a little bit easier for some of the smaller companies to be able to process some of their payments in Renminbi. That means the Mittelstand, basically the middle schicht of Germany, but also in France and other countries which are nearby, will find it a little bit easier to do their mechanical transactions. Clearing facilities are available, for example, for U.S. treasuries, both in the U.S. and in Europe and the like. So these kind of clearance and payment systems are the ones that you need to develop when you want to have a global system for either your currencies or, more importantly, for your bonds and others. So it's part of the bones and the mechanics of this system. At the end of the day, it doesn't matter. It doesn't matter once you have it. It matters when you don't have it, in the sense that it basically stops some activity from happening. So it's really, the things that we don't see in the real world, they do happen. There's a lot of sophisticated systems globally to make our financial system operate.
The move is likely to strengthen trade and investment ties between Germany and China by making it easier and less risky for business to be settled in the Chinese currency. How will this affect the Eurozone and also the euro?
Well, if we look at the way trade is settled, it's mostly settled in dollars rather than renminbi with China. So what China is trying to do is trying to make its currency more of an international currency. That is, if you trade with Europe, you trade in euro. If you trade with China, you're not mostly trading in renminbi. So as that develops, the part of the trade that develops, that will help some different markets in the renminbi, whether it's deposits, short-term liabilities, or assets, are going to start to develop more and get more liquidity. The currency itself will also see more liquidity from more physical trading. That is exports, imports, and the likes. And that generally is good for a currency if you want it to become international. It's also very important if you think that over the longer term, China will move away from being a massive exporter to being a country which will eventually import somewhat more than it does as it ages. And as it does so, it will actually need to have liabilities sold to the rest of the world in significant amounts. That means over a horizon of 10 to 20 years, they really need to develop their financial markets. And the currency floating currency is very important towards that step. If we look at what's happening in the case of China, they will need to liberalize their systems very fast. That means interest rates in China will have to go up. It also means that the costs for China of maintaining its quasi-peg with the dollar are significantly increasing, because essentially some of the costs of serializations are not anymore being absorbed by the very strong gains that they had from the depressed interest rates at home, as essentially the PBOC was printing money for free. So it's going to very technically, it's going to become very expensive for China to maintain its current FX policy. And as it moves to float, it really needs to have the bare bones and the mechanics of that system to develop globally. So that's a very important step for the next 5, 10 to 15 years. If we think of the impact for the Eurozone, it has very little impact. It has an impact mostly for the dollar, because the dollar was used as a means of transaction. So there is some residual from the demand for the dollar because of its use as a transaction, which is going to disappear. from a euro-dollar perspective, because at that point in time, China will be absorbing more euros than dollars. It's very good for the euro-dollar because it means that the mechanical selling of dollars and buying of euro, as China diversified its reserves, at least as it did in the past few years, we don't know what they're doing in the past few months, that will kind of diminish significantly. So that means euro-dollar will have a tendency to not be as big, as strongly as it used to be in the past.
And finally, Sebastien, will this have any negative impact on China's economic relationship with the UK?
No, I think what's happening to the UK is more of a signaling about a UK policy and the status of the relationship between the UK and China, and that seems to have deteriorated.
Okay, Sebastien, thank you so much for joining me on the line today, and that's it from me for now. But check back for more interviews from the team throughout the week. Bye for now.